The year is 2024, and the stock market is in turmoil once again. Investors are gripped by fear as they watch their portfolios plummet. But amidst the chaos, there lies a golden opportunity for those who know how to seize it. Welcome back to our channel, where we uncover the secrets to financial success. Today, we're diving deep into the world of investing to show you how you can get rich in 2024 despite the looming market crash. That being said, Buffett's regularity in style and way of thinking always resonates with what one might call common sense, in season and out of season. To pick apart the above and its implications for the year 2024, high inflation does have staying power. Even though it erodes purchasing power, it still provides for some opportunities. Some of the most common inflation hedge assets that appreciate during inflation include real estate and some stocks. In either case, the cure for high inflation is high inflation, and investors may consider these high-return assets to diversify their portfolios. Higher interest rates may also have consequences. While the rate hikes to the Federal Reserve may sound daunting, it offers some oakum for mending fishing nets. Savers make more money on cash and bonds, which uplifts inflows from fixed-income investments. Stocks of companies with good fundamentals often do better during rising interest rates. In both examples above, the government's debt burden impacts the taxpayer and the economy. However, it creates a demand for such safe harbor assets as U.S. Treasuries. Although in some cases, these cases may be extreme, the examples prove that an investor should consider including government bonds into the portfolio. Job market challenges in February 2024, job losses are finally admitted. However, consulting the previous experience shows that the market recovers, and new possibilities arise faster than anyone may expect. This is when a reliable and loyal investor should remember that panic sales are an opportunity to buy an asset that is undervalued. Panic sale discount opportunity, or PSDO, appears when extreme panic causes any kind of sale. Prices plummet, and an apt investor purchases the assets with a significant discount. In other words, if the investor is smart enough, the unexpected situations offer mega profits. Here is the classic case. Warren Buffett's principles for years. When the real estate market hit rock bottom in 2008, panic and uncertainty filled the air. Home prices plummeted, and many feared the worst for the housing market. But Robert saw something others didn't: opportunity. He recognized that panic often leads to mindless selling, creating a unique chance for smart investors. Here's how Robert navigated the chaos. Research and analysis. Robert dove into research. He studied historical trends, analyzed market data, and understood the underlying factors causing the crisis. Armed with knowledge, he identified undervalued properties that had potential for long-term growth. Robert knew that markets don't recover overnight. He exercised patience, waiting for the right moment. As panic persisted, he observed desperate sellers slashing prices. The PSDO was in full swing. Robert targeted distressed properties, foreclosures, short sales, and homes with motivated sellers. He negotiated hard, securing properties at significant discounts. His mantra: buy when others are fearful. Robert wasn't a flipper. He was an investor. He envisioned a brighter future for the housing market. He bought properties with the intention of holding them for years, allowing appreciation to work its magic. Robert understood that real estate cycles are cyclical. What goes down eventually bounces back. He saw the upside potential, the chance to turn panic-induced discounts into substantial gains. Robert's strategy paid off. Over the next decade, as the economy recovered, home prices gradually climbed. The properties he acquired during the crisis appreciated significantly. Robert didn't just survive, he thrived. Lessons from Robert's playbook. Think long-term. Panic is short-lived. Opportunities endure. Educate yourself. Understand market dynamics and historical patterns. Embrace uncertainty. Where others panic, find your advantage. Stay rational. Don't follow the herd. Think independently. Be patient. The best deals often take time to materialize. Remember, while crises create fear, they also create opportunities. Whether it's real estate, stocks, or any other asset, the PSDO mindset can turn uncertainty into wealth. Certainly, Robert's story is a testament to the power of contrarian thinking and seizing opportunities when others panic. Warren Buffett's philosophy of buying when others are fearful has consistently paid off for him, and it's a lesson we can all learn from. Now, let's explore those 3 once-in-a-lifetime golden opportunities that millennials and Gen Zers have witnessed. The dot-com bubble, late 1990s, early 2000s. The dot-com bubble was characterized by skyrocketing stock prices of internet-based companies. Investors were euphoric, pouring money into any company with .com in its name. However, when reality hit, many of these companies collapsed, wiping out fortunes. The lesson: beware of irrational exuberance and invest wisely, even during exciting times. The 2008 real estate crisis. The housing market bubble burst, leading to a global financial crisis. Home prices plummeted, and panic ensued. Savvy investors like Robert recognized the PSDO and bought undervalued properties. Over time, the market recovered, and those who held on reaped substantial gains. The COVID-19 pandemic, 2020. The pandemic caused widespread panic, market volatility, and economic uncertainty. Yet, it also created opportunities. Stocks dipped, but those who stayed invested saw remarkable rebounds. Companies adapted, and new trends emerged, e.g., remote work, e-commerce. Remember, while emotions can drive markets, rational thinking and a long-term perspective lead to success. As Buffett wisely said, the great moves are usually greeted by yawns. So, stay calm, think independently, and embrace opportunities, even when others panic. Warren Buffett's wisdom about listening to others when investing is crucial. Let's delve deeper into the concept of panic sale discount opportunities, PSDO, and explore the red flags for 2024. Panic. Emotional reactions drive markets. When panic sets in, prices plummet due to mindless selling. Sale. Investors offload assets at discounted prices during market turmoil. Opportunity. Smart investors recognize these discounts and capitalize on them. Historical recession patterns. The U.S. economy has experienced recessions almost every decade. The longest period without a recession followed the 2008 crash. The pandemic-induced recession was severe, but also presented opportunities. Financial readiness during stable periods is crucial. Bolster your bank account, build an emergency fund, and reduce debt. Prepared individuals can seize opportunities during challenging times. 2024 red flags. Cost of living. It exceeds what the average person can afford with their income. Higher interest rates pose a threat. Borrowing becomes more expensive. Record debt levels. Unprecedented credit card debt. Corporations and commercial real estate landlords burdened by high debt. Remember, while we can't predict the future, staying informed and financially prepared positions you to capitalize on opportunities when they arise. Keep an eye out for PSDOs and think long-term. Preparing for market crashes can be challenging, but following a well-thought-out strategy can make it more manageable. Let's delve into a 4-step strategy inspired by the timeless wisdom of Warren Buffett to navigate market crashes effectively. Step 1. Understanding your assets. Gain a comprehensive understanding of your investments and the rationale behind holding them. Avoid reactionary decisions fueled by fear. Resist the urge to engage in panic selling during temporary slumps. Conduct thorough assessments of the risk levels associated with your investments by delving into the underlying businesses and fundamentals. Step 2. Trust and diversification. Acknowledge the inherent risks that accompany market downturns, particularly in the volatile realm of the stock market. Implement diversification strategies by spreading your investments across various asset classes and industries. By diversifying, you can mitigate the impact of underperforming assets and safeguard your overall portfolio during turbulent times. Step 3. Embrace stock price declines. Adopt Buffett's perspective of finding joy in declining stock prices, recognizing them as opportunities rather than setbacks. Lower prices present lucrative buying opportunities for astute investors. Maintain a steadfast long-term perspective, prioritizing the underlying fundamentals of your investments over short-term fluctuations. Step 4. Maintain cash reserves. Recognize the importance of liquidity by ensuring you have adequate cash reserves readily available for emergencies and investment opportunities. During market crashes, capitalize on the availability of discounted assets by leveraging your cash reserves for strategic acquisitions. Remember Buffett's timeless advice. If a stock isn't worthy of long-term ownership, it's not worth considering for short-term speculation. In summary, Warren Buffett's enduring wisdom underscores the significance of adopting a long-term outlook and maintaining composure amidst market volatility. By adhering to these 4 steps: understanding your assets, trusting in diversification, embracing stock price declines, and keeping cash reserves, you'll be well-equipped to navigate market downturns and capitalize on emerging opportunities, regardless of the prevailing economic climate.